Hello and welcome back to Global Value. In today's video, we'll be taking a look at Seanergy Maritime Holdings Corp, ticker symbol SHIP, S-H-I-P. So Seanergy, the combination of sea and energy, is trading for $1.05 per share at the time of recording this video. Their stock price has gone up about 14% so far year to date. Over the last year, they're about flat. Going back 5 years, they're down 99.4%. And since they were listed, wow, this is amazing. Technically, they're down 99.999, whatever ticker rounds off at. But at one point, their price per share was over $170,000. And now they're basically a penny stock. It goes to show you that it's very important to have the discipline to really understand and know what you're investing in. Investing is not without risk. So Seanergy is in the midpoint of its 52-week high and low. The business has about a $186 million market cap. So what do they actually do? Seanergy Maritime Holdings Corp is an international shipping company. It engages in the seaborne transportation of dry bulk commodities, primarily iron ore and coal, worldwide. It operates a fleet of 17 Cape-size vessels that are an average of 12 years old. It owns and operates dry bulk vessels, and it generates a majority of its revenue from the vessels. It was formerly known as the Seanergy Merger Corp. And changed its name to Seanergy Maritime Holdings in July of 2008. Seanergy was incorporated in 2008 and is based in Athens, Greece. We'll be performing a modified 8-pillar analysis as popularized by Everything Money, taking a look at 8 different key financial metrics of the business and coming to a beginning holistic understanding of the business. So let's get right into it. Starting off with pillar number 1, we want their average 5-year PE to be below 22.5. So currently they have a PE of about 4, and over this time period, even though there have been huge swings both down and up, they've traded for less than 1 times earnings averaged out. So that's going to be a check to start off on pillar number 1. Pillar number 2, we want their average 5-year return on capital to be above 9%. Over the long run, a stock is going to return approximately what its underlying business returns, and this return on capital are going to be those business returns. They've had positive return on capital in 4 out of the 5 years, with a pretty nice increase in 2021. However, averaged out, they only produce about 5% as a return on capital, which is below that 9% metric we wanted. So pillar number 2 is going to be an X. Pillar number 3, we're looking for 5-year revenue growth. They've doubled revenues over the last 5 years. So that's a check there. Next up, pillar number 4, we're looking for 5-year net income growth. Net income is in white here. They had negative net income in 4 of the last 5 years, but they had positive $41 million of earnings last year. So that's going to be back-to-back checks on pillars 3 and 4. So far, we're 3 for 4. All right, pillar number 5, we're looking for decreasing shares outstanding. This is the exact opposite of what we wanted to see. This is terrible, horrible, wretched dilution. They've diluted existing shareholders 99.999% over this last 5 years. If you're an existing owner of this business, you're owning pennies on the dollar based on this share dilution. So this is a silent killer, and in this business, you would have been absolutely screwed. So that's a terrible X on pillar number 5. Pillar number 6, we're looking for 5-year free cash flow growth. This one's also going to be an X. They've only generated positive free cash flows in 2019, and that was about $760,000. Over this time period, they've significantly increased the amount of cash that they're burning. Averaged out, they burn about $41 million of cash each year. So that's a hard X on pillar number 6. Pillar number 7, we want their net debt to be below their average 5-year free cash flow times 5. This business has $180 million of net debt. Because they're burning cash flow, they aren't able to pay this off. So that's going to be an X on pillar number 7. Some really terrible signs through pillars 5, 6, and 7 after a relatively strong start. Finally, pillar number 8, we want their market cap to be below their average 5-year free cash flow multiplied by 20. They have a $186 million market cap, and again, they're not generating positive free cash flow, so pillar number 8 is also going to be an X. Lastly, I want to look at their dividend. It's actually pretty pathetic based on how much cash flow they burned, but they did issue a very small dividend last year, which is about a 3% yield. This could have been a last-ditch effort from management to potentially get new shareholders in here. Almost everything about their financials is screaming dumpster fire. So in summary, Seanergy checks the box on 3 out of 8 pillars. They have negative free cash flow that's only getting worse. They have loads of debt, and shareholders experienced a 99.9% dilution over the last 5 years. Stay away from this one, guys. This type of analysis is just a starting point. It's not a financial recommendation. I'm not seeing anything here in this starting point that would make me want to dig deeper into the business, but if you are interested in learning more, I recommend reading through the company's filings and see what you can learn about the business. Unless they have a Hail Mary miracle that they can pull from somewhere that's not showing up in these different metrics we covered, it looks like this business may be in for even more hurt on the road ahead. That's it for today's stock analysis of Seanergy Maritime Holdings Corp, ticker symbol SHIP. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for learning about Seanergy with me, and have a great day.